It's back in the news, and yet again for all the wrong reasons. Last week, the company announced that it would lay off 2,500 employees. Guess why it's back in the news today? The company has roped in football star Lionel Messi as its first global ambassador.
Asked its executives to leave in company-wide layoffs. The layoffs have happened across functions, including product and marketing and even technology. The unicorn has seen 3 senior-level executives resign in recent weeks.
They're going to lay off nearly 1,400 employees, nearly 25% of its total workforce.
The great Indian startup party has come to a screeching halt. Within the first half of this year, startups have laid off more than 11,000 employees as the pace of capital flow slows down, as money is expected to be dry until the next couple of years. Analysts project that another 60,000 employees could be losing their jobs this year. Among all the startups that have laid off employees, 10 startups were from the e-commerce industry, while 7 startups were from edtech. Of these startups, 7 to be specific were unicorns: Ola, Byju's, Unacademy Vedantu, Cast24 and Mobile Premier League MPL. Another unicorn, Blinkit, which was formerly known as Grofers, fired people when it was a unicorn but lost its unicorn status during the acquisition by Zomato. Indian startups grow at a notoriously faster pace than its neighboring regions, but the layoffs are a sobering reminder that the bigger startup became, the harder they fall. Just because a startup had touched sky-high valuation did not immediately mean its employees' jobs were insured. Byju's, which announced it will lay off 5% of its workforce or 2,500 employees, has quickly become the most prominent poster child for startups that grew too fast to sustain themselves. Valued at $22 billion, the edtech company is one of India's most valuable startups, but profitably has still eluded them. For the fiscal year that ended on 31st March 2021, Byju's reported a loss of 4,588 crores, 19 times bigger than its previous value. The Byju's Ravindran-led company has pushed the release of its financial data until September 2022. Revenue has also fallen from INR 2,511 crores in financial 22 to INR 2,428 crores in financial 2021. In a recent interview with Your Story, Ravindran appeared apologetic, saying that there's no scope for short-term optics. Just like anyone else, when you grow this fast, we have made our fair share of mistakes and we are sorry about it. When you're big privileged enough to make such a big impact, it's criminal to be complacent. The company states caught the attention of industry stalwarts like Harsh Goenka and Kiran Mazumdar-Shaw, who publicly called out its bloated valuation. Were employees of startups that expanded too much and too soon suffering from mismanagement? Sanam Rawal from Passion Connect, a strategic service unit that was incubated by Bloom Ventures. Passion Connect's team helps startup founders in Bloom's portfolio to network better and build a solid foundation. When asked whether this was a malaise restricted to edtech, Rawal stated that that's not true at all. Startups from across all sectors could be struggling with this problem because it's a macro level issue and entirely depending on the state it is in. Rawal explained that this well-defined culture of mass firing is something that is sentimental naturally covered in the sentimental manner, while she thinks this is justiciable because jobs involve people's livelihood and there are valid reasons for this. According to Rawal, the notion that startups are overhiring is a wrong notion. It is an essential and strategic move for startups to deploy resources. Once startups reach the Series C funding stage, it is obvious that they will have to cut costs to achieve profitability. Startups in this ecosystem have the challenge to adapt very quickly on the basis of the dynamic microeconomic environment. Regulations change overnight, like ByteDance getting banned in India suddenly, and every big company in the world has had to lay off people in the past and even now. The biggest global tech companies like Meta are the ones firing in huge numbers, she said.
The Facebook owner is beginning major layoffs. According to the Wall Street Journal, CEO Mark Zuckerberg acknowledged the company's recent missteps and says that his over-optimism about growth had led to overstaffing.
Rawal also doesn't agree with the narrative that VCs are applying pressure on the companies to expand ahead of time. VCs are only helping the company to solve the problem statement and achieve profitability ultimately. It isn't undue pressure, there are guiding startups towards their goal of profit making, she noted. She also believes that the onus is also on prospective employees to research the startup they're joining. They must look further than the heightened CTC that they have been offered. Which stage the company is at, how much runway do they have? All this is vital, she stated. Basically, very bluntly speaking, the venture capitalists now are aiming on profitability rather than how much market share the startup has. After the devastating listing of the new age startups like Paytm, Nykaa, Carteret and Zomato, they are focusing on profitability and forcing startups to shorten their losses. And the startups under the pressure of the venture capitalists are firing off their employees to save money on their salaries. On the contrary, bootstrap startups like Wingify, Zerodha and Zoho have fared well in the recent past, as Indian startups depending on VC investment are taking a beating due to poor microeconomic conditions. Bootstrap startups have soared. In a Financial Express interview, Zerodha co-founder and CEO Nikhil Kamath spoke about how whether a startup could be bootstrapped depends on the industry it is in. In addition, he also explained the definite advantages of bootstrapping. As soon as you take money from an investor, you are committed to make their money grow. Now you have to set a target and start chasing it. Once you set a target, you start optimizing for the target. In this scenario, you can maybe let go of some of the reasons why you even did the business in the first place, he stated. Kamath and his brother Nikhil Kamath, who co-founded the stock brokerage firm, have never raised angel or venture capitalist money. The startup is now a $2 billion company. The startup layoff drive doesn't seem to stop anytime soon. With a possible recession coming further, the situation will only get worse from here. Now, we have come to the end of the video and I hope you all must have learned something valuable today in this video. Thank you for watching.